Assalamualaikum warahmatullahi wabarakatuh. We are from Group 1 and we would like to present our discussion. But before that, let me introduce ourselves. My name is Nazla Salsabilla and my group members are Fikri, Anwar, Rosyid, and Bintang Cantika. Okay, let's start the presentation. Okay, so here we have a winter company transaction in January 2017. So the first transaction is Winter accepted a 4-month 8% note from Merando Company in payment of Miranda's 1,200 account. So here the journal is notes receivable in debit $1,200 and in the credit we have account receivable for Miranda Company. It's because they have paid, so the account receivable is decreased. Okay, so the next transaction, Winter wrote off as uncollectible the accounts of Inwood Corporation for $150 and Goza Company $280. So the journal here is allowance for the full accounts. It's $730. It's because $4,050 plus $280. It's equals $730. Okay, the next transaction at 8 January is Winter purchased $17,200 of inventory on account, which means it's inventory in debit $17,200 and account payable in credit it's $17,200. Okay, the next one. Winter sold for $28,000 on account inventory that cost $19,600. So the journal is account receivable in debit $28,000 and in the credit we have sales revenue it's $28,000 too and cost of goods sold it's $19,600 because we got it from the transaction and in the credit side it's inventory $19,600. Okay, so the next one is Winter sold inventory that cost $700 to $700 to Mark Lauber for $1,000. Lauber charged this amount on his Visa First Bank card. The service fee charged Winter by First Bank is 3%. So the journal is cash $970 and service charge expense it's 30. We got it from 3% of $1,000 and the credit side it's sales revenue it's $1,000 and also we have cost of goods sold here. Cost of goods sold in debit side it's $700 and inventory is in the credit is $700 too. And the next one is Winter collected $22,900 from customers on account, which is the cash is $22,900 in debit and account receivable $22,900 in credit. And the next one is Winter paid $14,300 on accounts payable. So the accounts payable is decreased and account payable in credit $14,300 and cash is decreased. So cash in credit side $14,300 too. And the next one is Winter received payment in full $280 from Goza Company on the account written off on January 3rd. So in here we have account receivable. It's $280 and we got allowance for the full account in credit. The amount is $280 too because they have paid to us, so our cash is increased and the cash is $280 on debit and account receivable is decreased $280. Okay, the next one is Winter purchase supplies for $1,400 cash. So we got supplies here, supplies, and the supplies is $1,400 on debit, and the cash is decreased. So cash $1,400 in credit. And the last one is Winter paid other operating expenses $3,718. So we have other operating expenses $3,718 on debit and the cash is decreased. So the cash and credit is $3,718. Okay, and here we have adjusting entries that we entry in the end of period. So it's always in the end of the period. The first one is interest is recorded for the month on the note from January 1st. So the journal is interest receivable $8 and interest revenue in credit is $8. We got it from $1,200 times 8% and divided by 12 months. So we got $8 on debit and $8 also in credit for interest revenue. Okay, the next one is bad debts are expected to be 6% of the January 31st, 2017 account receivable. So we got it from $22,950 times 6% and minus 800 minus 730 plus 280 and we got $1,027. So the bad debt expense is $1,027 and the allowance for the full account is $1,027 too on credit. Okay, the last one is account of supplies on January 31, 2017 reveals that $560 remains unused. So the supplies expense is $840. We got it from $1,400 minus $560, which means supplies expense is $840 on debit and supplies is $840 on credit. So that's all for me. And the next one is Fikri. Time is yours.
Okay. The next one is adjust trial balance. We can continue this adjust trial balance after we finishing the journal entries that the question make. Okay. We have cash on the debit is $17,832. And the second one is we have not receivable on the debit is 1,000 to 1,200, and also account receivable 22,950 dollars, and allowance for job account we in the credit we have 1,377, and interest receivable is 800. In the inventory one is we have 6,300, and for the supplies we have 560, and account payable 11,650, and owner capital 32,730. Sales revenue on the credit is 29,000, and cost of goods sold on the debit we have 20,300. Also, we continue for the supply for the expense. Supply expense we have on the debit we have 840, and for the bad debt expense we have 1,020, and service charge expense we have $30. Other operating expense we have 3,708, and the last one is interest revenue. We have $8, and the total is balance is the total the 74,765, and that's all for me.
Okay, thank you, Fikri. And the last one will present it by Bintang Cantika. Time is yours. Wait.
Okay, thank you for the
Wait.
permission, moderator. So, in the third instruction is about prepare an income statement and an owner's equity statement for the month ending January 31, 2017, and a classified balances as of January 31, 2017. As we know, in making financial reports, we only need to look at the data from the trial balance after adjustment. And in here, the first one is income statement. As we know, income statement is consists of revenue and expenses. And the revenue in here, there are sales revenue and cost of goods sold. The sales revenue is amount $29,000, and we less with cost of goods sold. The amount is $20,300, and we got the gross profit is $8,700, and the expenses is there's supplies expenses, and the amount is $840. Bad debt expenses, the amount is $1,027, and the service charge expenses $30. Other operating expenses, the amount is $3,700. $718. And the total of operating expenses is $5,165. And then we less with the and then the gross profit we less with the total operation expenses and we get income from operation, and the amount is $3,085. There is other revenue and gains in income statement here, that is interest revenue, and we add that in interest revenue with the total of operation, and we get the income before tax is $3,093. And the second one is statement of equity change. So as we know, in the statement of equity change is consists of owner's equity or owner's capital and income before tax. In here, owner's equity in December 31 in 2060, and the amount is $32,730. And that's in the owner equity with income before tax, and the amount is $3,093. And we got the owner's equity in January 31 and 2017. Then the amount is $35,823. And the next one is balance sheets. As we know, in balance sheets there are activa and passiva. In the activa is consists with assets. There are shares. The amount is $17 and $832, and there are notes receivable. The amount is $1,200, and there are account receivable. The amount is $22 and $950, and we less the account receivable with allowance for doubtful accounts, and we get $21,573. And there are interest receivable. The amount is $8, and inventory, the amount is $6,300, and there are supplies, and the amount is $560. And the total of assets we get $47,000 and $473. Yeah, $73. And in passive sides there is a liabilities and equity. So there are account payable. The amount is $11,650, and there are owner's equity to $35,823, and we edit in it, and we get the total liabilities and equity is $47,473. And yeah, that's all for me. Yeah, we back to moderator.
Okay, so that's all from us. Thank you very much for your attention. Assalamualaikum warahmatullahi wabarakatuh.